Okay, now let's go ahead with the next type of duty, and the next type of duty is safeguard duty. And according to me, this is important from exam point of view. Either you can have a full-fledged question of 4 marks or 5 marks from this topic, or you can even have an MCQ from this topic. Now, what is safeguard duty? By name, it is clear: safeguard, to guard, to save people of your country, your domestic suppliers. I hope you're with me. So, what is happening? When will this safeguard duty come into picture? As per Section 8, subsection B of Custom Tariff Act, when will this duty come into picture? Safeguard duty can be imposed if the central government on inquiry finds that the import in increased quantity has caused serious injury to domestic players. Understand, if there's too much import in India, so what will happen? Supply will increase, and demand will not be there. Automatically price will come down. We know this economics. If supply is high and demand is not there, supply will come down, price will come down. Are you with me? Yes or no? So what is happening? Too much import is happening into India. Too much quantity of goods are imported into India, which cause serious injury to domestic players, or threatening to cause something which is already caused, or there is some threat that it may cause serious injury in future. Then to protect my domestic players, to protect the Indians over here, government will impose a duty which will be called as safeguard duty as per Section 8B of Custom Tariff Act. Am I clear? Am I clear? It can be imposed irrespective of origin of imported goods. Now, we'll see the safeguard duty. Now, there's no fixed formula. There's no fixed formula that safeguard duty percentage will be this. They will give the percentage as per the situation. How much quantity has been imported into India? How much injury has happened or can happen in future? Seeing all this thing, they will decide as to how much percentage of safeguard duty need to be imposed. Am I clear? Again, until and unless question does not talk about safeguard duty, you are not going to impose safeguard duty. Safeguard duty will come into picture only when specifically said in the question. Clear? The question comes when safeguard duty will come into picture. First, when too much import has been happened into India, which has caused or which can cause serious injury to domestic players, so government can impose a duty which is called as safeguard duty. Now, period of imposition. The safeguard duty, unless it is revoked earlier, be in force till the expiry of 4 years from the date of imposition. Unless it is revoked earlier, if the date it's imposed, it will be there for 4 years. However, the central government can extend the period of imposition, but total period of imposition, including extension, cannot be beyond 10 years. In short, 4 years from day one, and if you want to extend it, you can go for extension, but maximum extension, including the first period of imposition, cannot be more than 10 years. That means 4 plus 6. Am I clear? Now, this is very important. This is very important. Boss, please keep in mind, we are going to solve 2 practical questions. One, how to calculate safeguard duty. Second, when you are going to get exemption from safeguard duty. Again, I'm saying important from exam point of view, and damn important from exam point of view. Exemption from safeguard duty. Safeguard duty cannot be imposed on articles originating from developing countries. Now, as per you and as per me, no developing countries. As per them, which country they have declared as developing country. So first, what they're trying to say is safeguard duty cannot be imposed on articles originating from developing country. Let's go in depth. In case of articles originating from developing country, that is a country notified by the government of India for purpose of levy of such duty, The duty cannot be imposed under following circumstances. As per you and as per me, no. As per central government for this particular section, where they say that okay, this country is a developing country, then only it is a developing country for this section. First point, very important. Immediately we'll see a question over here. If the import of such article from developing country does not exceed 3%, that means does not exceed means up to 3%. Listen to me. If my goods are getting imported from which country? From a developing country, and if it is up to 3%, if it is what? Up to 3%, are you with me? Then no safeguard duty. The moment it crosses 3% from that developing country, you will impose safeguard duty. Suppose I am importing some goods from one developing country, only one. Suppose country A, just one. How much percent? Total imports 2.9%. Total imports 2.9% is imported from country A. That means up to 3%. Then in that case, I won't be levying safeguard duty on country A imports. But if the import from country A is 3.1% of total imports, 3.1% of total import, that means it is beyond 3%. It should be up to 3%. If it's up to 3%, then no safeguard duty. The moment it crosses 3%, safeguard duty will be there. Second point. Now, first point, what I'm assuming that you are importing from only one developing country. When it's only one developing country, I will see up to 3%. Up to 3%. But second point, where the article is originating from more than one developing country, assuming I have three developing countries. I have three developing countries and I am getting stuff imported from these three developing countries. That means more than one. In that case, each with less than 3% is less, whereas more than one developing country, each should be less than 3%. Then the aggregate of imports of all such countries taken together should not exceed 9% of total imports of that article in India. See, understand? If it is beyond 3%, question ही नहीं है, you will have to levy safeguard duty. If it's beyond 3%, you will have to levy safeguard duty. Now, if you are importing from more than one developing country, then you will see it should be less than 3%. It should be less than 3%, and total of all such imports should be up to 9%. Let's say example. Let's an example. Come to question 2. Determine the safeguard duty payable by X Limited, Y Limited and Z Limited and A Limited under Section 8B of Custom Tariff Act from Customs Act from the following. Import of sodium nitrate from developing and developed countries from 26 January 2000, let's make it 19 or 2018, sorry, 2018 to 25th February 2019, that means within a year, are as follows. X Limited is an importer, country of import, developing country, Y Limited, Z Limited, A Limited, others. I hope you're with me. Total 2,500 crores in rupees has been imported into India. Am I clear? X importer has imported, Y has imported, Z has imported, A has imported, others have imported. Total import of sodium nitrate in India in that 1 year is 2,500 crores in rupees. Am I clear? Too much quantity has been imported. Safeguard duty is how much? 30%. Safeguard duty is how much? 30%. I hope you're with me. Now you have to check over here. Now you have to check over here, okay, what percentage is X has imported from developing country. So if you see over here, importer X limited, country of import is developing country, in crores is 70 crores. 70 crores out of 2500 crores is 2.8%. That means less than 3%. Less than 3%. Am I clear? Y has again imported from developing country. How much? 82 crores. 82 crores out of 2500 is around 3.28%. Boss, the moment any developing country cross. See, simple logic. If I see individually, the moment it cross 3% from a developing country, I will levy safeguard duty. So your safeguard duty will be there, right? Now, when it is less than 3%, when it is what? Less than 3%, then I do need to check totality also, in which there are two conditions. See, when it is like more countries, when it is more developing countries, I have to check two things: individual as well as in totality. Individual should be less than 3% and totality should be up to 9%. If both the conditions are satisfied, then only safeguard duty will not come into picture. Am I clear? So when I say X limited importer has imported from developing country 70 crores out of 2500 crores, that means it is 2.8%. Z limited developing country has imported 52 crores out of 2500 crores, which is again 2.08%. Same as A limited, that is 2%. Total comes to 6.88%, which is up to 9%. That means this three, X, Z and A. I'm not going to cover others because that is developed countries. Am I clear? X, Z and A have satisfied both the conditions. First, individual condition. Individually, they were less than 3%. And in totality, they were up to 9%. So in this case, in X, in Z, in A, there will be no safeguard duty. Safeguard duty will be there in the case of Y as well as in case of others. Am I clear? Am I clear? So if I see X, A, Y, X, Y, Z and A. X नहीं लगेगा, Y yes, Z no, A no. 82 crores, 30% comes to 24.6 will be your safeguard duty for that developing country. I hope you're with me. See, articles originating from more than one developing countries, each with less than 3% import share, then the aggregate of imports from all such countries taken together does not exceed 9% of total imports of that article into India. Therefore, safeguard is not applicable in X, Z and A. I hope you're with me. It is applicable on developed country. This 30% will be there. Don't worry about that. We are just discussing over here of developing countries. See, again, first check individually. Individual percentage. The moment individual cross 3% question over, you will levy in case of Y. Why? What has happened? It is 3.28%. It has the individual limit it has crossed. So Y safeguard duty will always come into picture. Now X, Z and A, they are individually less than 3%. Am I clear? Up to 3 I was okay. Up to 3, when I say individually it was okay. But now when there are more than one developing countries, when I'm importing from more than one developing countries, I hope you're with me. Individually, it should be less than 3% and totality should be up to 9%. If both the conditions are satisfied, then in that case, no safeguard duty will be levied. Am I clear? I'm again reading the provision. Boss, according to me, this is really important from exam point of view. If the imports of such article from developing country does not, see, developing country, when you're just importing from one developing country, only one developing country, I will see up to 3%. But when it is more than one developing country, that means countries that is not 3%, it is less than 3%, and in totality it is up to 9%. So if it is only one country, developing country, limit is 3%. Whereas more than one developing country, limit is less than 3%, and in totality up to 9%. Am I very clear? Am I very clear? Can I go ahead? The first point, when is safeguard duty exempted? When is safeguard duty exempted? Second, imports by EOU or unit in SEZ. If EOU has imported some units or SEZ has imported some units, see EOU, export oriented units, what is their job? They import, they do something manufacturing and they export it. And SEZ, Special Economic Zone, is considered to be a place outside India for tax purpose. So if EOU is importing or SEZ is importing some stuff, for on them safeguard duty will not be applicable unless specifically made applicable, unless something happened and government has declared no, SEZ also imported, so we will go for safeguard duty, or EOU also imported, we will go for safeguard duty. That's a different scenario. Second point, the article imported is either cleared as such into DTA or used in the manufacture of any goods that are cleared into DTA. What is DTA? Domestic tariff area. What is DTA? Domestic tariff area. Now see, this is like playing smart. This is like playing smart. How they're playing smart? Assume USA importing something to India directly. And when I say India, I am talking about DTA. I am talking about DTA, domestic tariff area. So safeguard duty will be applicable, assuming 8B is there. But now importer acted smartly. What importer did? Importer, he brought to SEZ, and from SEZ he brought to DTA. What will you show? That import was done by SEZ. Boss, import was done by SEZ, but it was cleared as such into DTA. That means it's just a route to protect yourself from safeguard duty. Basically, your intention was to bring directly the goods to the DTA, but just you wanted to protect yourself from safeguard duty. What you did, you have planned a route. What you did, you brought to SEZ or you brought to EOU, and from there you brought to DTA as such. As such means as it is, or you may even have what you must have done in SEZ or in EOU, you must have done some manufacturing, you must have changed the form, and after changing the form, you have imported it into DTA. End of the day, the goods are coming to DTA, that means domestic tariff area. Why did I say no for SEZ? Because SEZ, normally they export. Why did I say no for EOU? Because normally they export. The moment they brought into DT, that means now goods are coming into India at a very huge quantity, which can affect my domestic suppliers. Now, how can I protect my domestic people? I can protect them only by making export goods costly. And how can I do that? By imposing more and more duties. Getting my point? Am I clear till here? Any problem till here? I hope you're getting my point what I'm trying to convey over here. They have just planned a route. Normally we also do, we travel, we try to find a route where we are charged less. Same way, they planned like that. Let's bring from USA to SEZ and from SEZ to DTA. End of the day, the goods have reached to DTA only. Am I clear? Am I clear till here? Any problem? So what have we studied? Normally, see, important from exam point of view. Normally, when will safeguard duty come into picture? First section is 8B. Again, final students, no options, no choice. You have to quote sections. How to be an odd person? I always tell in my lectures, I don't like to be a part of crowd. What everybody do, I never do that. In fact, I always want to be a person who is in the crowd, but again identified separately. Am I clear? And one example that we are chartered accountants, which shows that we are not a part of a crowd. We are minorities. Same way, if you want to get marks in your exam, everybody will write the answer. You write the answer along with a section. Your paper will be different from others. Be different. Do something unique. 8B. Okay, now when will safeguard duty come into picture? When too much goods are imported into India. Too much goods are imported into India, which has seriously injured my domestic players or may injure domestic players. I will impose safeguard duty to safeguard my people. For how many years? For 4 years. Can it be extended? Yes, but maximum 4 plus 6. It cannot go beyond 10 years from the date of imposition. Is there some exemption? Yes. If you are importing from which country? Developing country as notified by central government for this section. Then only. But there too there are some conditions. First, if I'm importing from only one developing country, it should be up to 3% of the total imports of that product. Am I clear? Am I clear? For example, I've just discussed the example. Total import was how much? Total input was how much? 2500. 2500. Then I went and saw each and every country from how much we have imported. Am I clear? I got to know the percentage. I got to know the percentage. So when it's only one country, up to 3%. But when I'm importing from more than one developing countries, then each country should be less than 3% and total should be up to 9%. Am I clear? Okay, some other exemption, yes, if EOU or SEZ is importing, no safeguard duty. But yeah, if EOU and SEZs are importing, there may be safeguard duty if specifically said, or when from EOU or SEZ, the goods are coming to DTA, domestic tariff area, that means intention was to bring into DT only by protecting yourself from safeguard duty of just plan a route like that. Clear till here? Am I clear? Can I go ahead? Okay. Provisional assessment. Is this a provisional assessment? Yes. The central government is also empowered to impose provisionally safeguard duty pending determination of final. See, at times what happened? We know provisions. I know provisions. And if we are chartered accountants, bots, we know provisions. Who knows better than us? March month. The bill is not in my hands. I want to close my books. I will have a provision, a rough estimation. Same over here. When I'm unable to finalize the safeguard duty and I want to protect my people, I will go for provisional assessment. Central government is also empowered to impose provisional safeguard duty pending determination of the final duty. The provisional duty shall be enforced for a maximum period of 200 days from the date of its imposition. Suppose if I have imposed provisional safeguard duty today, it will be there for maximum 200 days. Within that 200 days, decide what need to be done. If upon final determination, the central government is of the opinion that the increased imports have not caused or threatened to cause serious injury to domestic industry, the duty collected shall be refunded. Suppose I have done provisional assessment, I have taken money from you people, but then I have realized that nothing as such has happened to my domestic players. There was no need of any safeguard duty. So whatever was collected from you people, I will refund it back. Am I clear? Am I clear? Is safeguard duty section 8b clear? So before going to this question, let's revise safeguard duty section 8b. When too much injury can affect my domestic players. Okay, how many years? 4 years. Extension, yes, 4 plus 6, maximum 10 years. Okay, is there some formula? No, no formula as such, no percentage as such. It depends upon case to case. Okay, is there some exemption? Yes. When if you're importing from developing country, then no safeguard duty, but it will be there only assuming if you're importing, if the total import out of the total import, you're importing from only one developing country. If it's only one developing country, it should be up to 3%. Then no safeguard duty on that developing country. But if you are importing from more than one developing country, individual limit is less than 3%. In totality is up to 9%. Then no safeguard duty. Any other exemption? Yes. SEZ and EOU importing, no safeguard duty. But if said specifically, then yes. Or else, if SEZ is transferring goods to EOU or SEZ is transferring goods to DTA or EOU is transferring goods to DTA, then safeguard duty will come into picture. Am I clear? Okay. Some provisional assessment? Yes. Maximum how many days? For 200 days. After final assessment, if you feel that it was not required, you have to refund the money back. Am I clear? Now come to this question. Determine the custom duty payable under the Custom Tariff Act 1975, including the safeguard duty. I've made myself very clear. Until and unless not said in the question, you are not going to revise safeguard duty. Okay. But they are saying that yeah, you have to revise safeguard with the rate of 30% with the following information. Assessable value, including landing charges of sodium nitrate imported from a developing country from 26 February 2019 to 25 February 2020 was 30 lakhs. In this 1 year, sodium nitrate imported was 30 lakhs, out of which the share of that developing country was 4%. Only one developing country, and in case of one developing country, it should be up to 3%. The moment it cross 3%, safeguard duty will be applicable. So in this case, safeguard duty will be applicable. Yes. Am I clear? Now the person who doesn't know this now, they may understand that 4% is some rate and they may apply like that. Okay. Is safeguard duty there? Yes. BCD how much percent? 10%. Integrated tax under section 3 subsection 7 is 18%. Social welfare surcharge is 10%. Boss, they have given. Even if they have not given, I know that social welfare surcharge is always on BCD. So BCD is there, SWS will be there. And no GST compensation says. Please see the order. 30 lakhs is my assessable value. On that 10% BCD, which comes to 3 lakhs. Now, most important, safeguard duty of 30% is on 30 lakhs on the assessable value. Safeguard duty is imposable in the given case since share of imports of sodium nitrate from a developing country is more than 3% of total imports of sodium nitrate into India. 30 lakhs, 30% comes to 9 lakhs. One important thing. Second important thing, social welfare surcharge is on BCD. Social welfare surcharge is on BCD only. When we had done social welfare surcharge, it was very clear that social welfare surcharge will not be there on 37, will not be there on 39, will not be there on safeguard duty, will not be there on other duties which we are going to study today. Am I clear? The social welfare surcharge will only be on BCD, 10% of BCD, that means 3 lakhs, 10% 3 lakhs, 10% comes to 30,000. Am I clear? Total is now 30 lakhs plus 3 lakhs plus 9 lakhs plus 30,000 comes to 42 lakhs 30,000, and my integrated tax is on this amount. Boss, we quite pass. See, why am I levying 37? Because in India, GST is there. So in import, we are levying 37. In India, if GST is at the rate of 18%, the 37 will also be a rate of 18%. And in India, it's specifically said in the valuation of GST in section 15, subsection 2, clause A, 15(2)(a). If any other taxes or any other duty or any cess has been paid, you have to add that, or after adding that, then on total amount you're going to charge GST. So rate same and valuation method also same. So before levying GST, I have already levied BCD, already levied safeguard duty, already levied social welfare surcharge. I have a total which comes to 42 lakhs 30,000, and on that I will be levying 18%, which comes to 7 lakhs 61,400. So my total custom duty is BCD 3 lakhs, safeguard duty 9 lakhs, social welfare surcharge 30,000, and integrated tax 7,61,400, which total comes to 19,91,400 rupees. Am I very clear? Boss, we have studied two questions. We have studied two questions. First question, what we have done was, when I was importing from more than one developing country, it should be individually less than 3 and in totality up to 9. The moment it cross, it is 3 or more than 3 for more than one developing country, safeguard will be there. Second question which you have done right now, if it's only one developing country, it should be up to 3%. Here it was 4%, so safeguard duty is applicable. Am I clear? Am I clear? Is safeguard duty very clear according to me now? See, now what I personally believe is valuation chapter is becoming very easy in custom. Not that difficult. If they want to raise their own standard, they will go to this type of questions. Am I clear? Am I clear? Is safeguard duty very clear? Sure. Section 8B, yes. When too much imports into India affecting my domestic people, yes. Third, how many years? 4 years, yes. Any extension, yes. Maximum 4 plus 6 up to 10 years, okay. Then any exemption, yes. In case of developing country, if it's only a single developing country you're importing, total imports up to 3%. More than one developing country, total imports, then individual should be less than 3% and in totality it should be up to 9%. Second exemption, SEZ and EOU. SEZ and EOU importing, no safeguard duty, but if said, then yes, or else if SEZ or EOU is transferring goods to DTA as such or after manufacturing, then also. Am I clear? There is some provisional safeguard duty, yes. For how many days? Maximum 200 days. Am I clear? Is safeguard duty very clear? According to me, very important from exam point of view. Sure? Can I go ahead? Okay.